I'm just testing if I'm audible. Shane, can you just confirm that?
Yes, you are audible, Marlon.
Okay.
Loud and clear.
Give, people maybe 3 more minutes, the people that are in the waiting room, so that you can admit. I think we can start. Hi, everyone. Welcome to Brendmo webinar, where we are talking about the importance of bookkeeping, as well as interpreting your financial data. So in this welcome, thank you very much for joining us. I hope I'm audible to everyone. So just to let you know that we are also live streaming on our platforms, our LinkedIn, as well as our YouTube. So thank you very much for joining us. We hope that you are going to find this webinar very useful. So just to start off, my name is, what we are going to cover in this seminar, we're just going to briefly talk about us, Brendmo Chartered Accountants, and we want to talk about what is bookkeeping, the basics of that bookkeeping, and what is important is the interpretation of key financial data. Then we'll conclude. So I think that the webinar is not too long, and we are also going to have an example of a good management account for your interpretation of your key financial data. So my name, as a way of introduction, my name is Molem Mkuzi. I'm the MD of Brendmo Chartered Accountants. I'm a registered auditor and a tax practitioner. Brendmo, we are a dynamic and professional accounting firm. We are based, our head office is in Midrand, South Africa, and we have establishments in Zimbabwe and the UK. What is key for us is we call ourselves accountability partners as we live by this daily. What do I mean by that? We make sure that we account to the clients that we service, so that at least they grow their business together with us. That's why we always call ourselves accountability partners as well. So our services, just in brief, we offer secretarial services, your company registration, your company amendments with the registrars of companies. We also offer consulting services, mainly in the setting up of business processes and performance management process setup on different companies. We also do audit readiness or audit and audit readiness as a service as well. We offer internal audits. We also offer payroll in some HR-related services. The reason why I'm saying some HR-related, because we are not full-blown in the HR, but we offer some. We also offer tax services and the accounting, bookkeeping, management accounts, and financial statements, which we are going to dwell on today, because accounting and bookkeeping goes hand in hand, and also the financial statements and the interpretation of those statements. That's what we are going to be dealing with today. So those are our services in brief. So back to the business of today, the objective when you're coming out of this seminar or of this webinar today, you need to know what is the bookkeeping in general. I think everyone have an idea. And also you need to understand the importance of bookkeeping. And you need to know and interpret key financial data for your company and know how management accounts should look like. Because I know sometimes people will say, no, my accounts, but you don't know what should the management accounts look like for you to be able to make key decisions from those numbers. So that this is our webinar objective for today. So just to get to know you, I think Shane is gonna just run a poll just to understand who is who in the seminar. So I just want us to just say, getting to know you. Are you an entrepreneur? Are you a business owner? Are you an entrepreneur to be, or are you a CFO and accountant of any company that you are representing as well? Just in a brief, before we just start with the basics of today. Shane, are you winning with the poll?
Yes, it should be up now.
Okay.
Yeah, it's up.
Okay, so just takes few seconds to just, so that at least we get to know you. Okay, we are about to end the poll. Just take a second to give us who you are, so that at least we know who we are addressing to. So I see that we have about 67% entrepreneurs or owners, or 60%, and the entrepreneur to be, which is very good. And I think this seminar is going to be very interesting to you, which is 20%. Thank you for that. So we have 60% entrepreneur to be, and 60% owners or entrepreneurs, and 20% entrepreneur to be, and 20% CFOs or accountants. Thank you for that information. Okay. I don't know why my slide is not moving. Apologies for that. Okay. Okay, so we're starting with the bookkeeping part of our webinar. So basics of bookkeeping. Bookkeeping is a process of just recording and tracking your financial transactions of your business. So why do you do that? You do that for you to be able to have a meaning out of your financial data. So it's a process of recording and tracking all financial transactions of your business. It actually involves organizing and documenting financial data to provide an accurate picture of a company's financial health. So as we said, we are an accounting firm. Through running the accounting firm, we've seen that if the owner or the entrepreneur doesn't track their financial information, basically they'll be running in a darkness, and they won't be able to make key decisions for the company and to know how their company is actually performing. So organizing and documenting financial data is very important because it gives you a bigger picture of the financial health of the company. So the record keeping can be done, especially now that we have a lot of systems and softwares. It can be done using accounting softwares. Now we have QuickBooks, we have Sage Accounting, Xero, a lot of accounting softwares that helps a lot of companies to do their record keeping, unlike back then when we were 100% in manual. So it can be done in this software. Someone might say, no, these softwares are very expensive. So because the softwares are monthly subscription. But if you work with accountants, especially from our side, accountants get a wholesale price so that at least they can just pass on that discount to you. But you need to have your accounting softwares. We have had a lot of clients as well from our side where they were relying on the accountant's software. So if something goes sour, you had that, no, we don't necessarily now have the information for our books because the accountant was using their own softwares. So make sure you own your financial data. It's your company's financial data. So it's very, very important that you use your own software. Then you give access to the accountant. So it's very, very important to have your own software for your bookkeeping, for your record keeping. So why is this record keeping important? So there are 4 key things that I want to just speak about. So first of all is in the preparation of tax obligation. So accurate bookkeeping ensures compliance with tax regulations, and it actually facilitates timely tax filing. So you know that the tax season have deadlines. So if you are not keeping your books in order, you find yourself maybe not even submitting on time, or hence you end up incurring interest and penalties. So bookkeeping, correct bookkeeping helps you to prepare for tax obligation and in timely. I always call the interest and penalties fruitless and wasteful expenditure, because it's something that you can do as a business owner or as an accountant or a CFO of an organization to prepare for such time. So also bookkeeping helps you to make informed financial decisions. You will see when you go to the next segment where we talk about interpreting the financial data. So from that data, you need, within a clear understanding of financial performance of the business, you as a business owner can make strategic decisions that align with the financial goals. So now we're getting into December. A lot of people are saying, no, it's a time to wind down. But from business owner's perspective, I think it's a time for reflection. What happened during the year? What financial goals had I put when the year was starting? And what are the financial goals for the next? How did we perform? So all those, if you are not doing bookkeeping, you cannot be able to make those financial and strategic decisions for the company. And also bookkeeping can actually help you to, I think I repeated this, to make the financial decision with a clear understanding of your financial performance. Okay, so I just wanted to ask here, do you use a system for your bookkeeping? So you can just answer yes or no. Also, do you need help in setting up your bookkeeping system? Remember what I said, that as accountants, actual accountants get a bulk discount licenses, which can actually help a lot of companies to, when they because remember I said you need to have your system that helps you record your information in your system that you own as a business owner. So if you answer no, you can actually text us as well. We can see how we can assist you to get a system at a very discounted price, so that at least you can start recording your books there. So when we are doing this poll, okay, so at least thanks to those that are actually using a system, which is very, very important, and make sure you own the system, is in your company's name, so that even if you have a bad relationship later on with your accountant, you can you own your financial data, which is very, very important. So those that need help, you have to text on the inbox text. You can send a message to someone who is Brendmo there, to say you put in your email address, so that you can see how we can assist you in that regard. You can end the poll, Shane. So we have 55%. We have 45% that doesn't have accounting systems, so we can assist you on that. But big up to those that are actually doing a system for their bookkeeping. Okay, so that's the importance of bookkeeping and why you should do bookkeeping, for you to have a bigger picture of your business financial performance. So I think from my perspective, this is the most important part of this webinar, because I think people have an understanding what is bookkeeping. You use Sage, you use Pastel, you use a different softwares. So, but now, how do you interpret your financial data? So I'm going to also share an example of a good management accounting pack that you can get from your accountant, so that at least you have a view of what's happening in your business, and so that you can be able to make key decisions for the growth and the success of your company. So just before that, do you feel confident in interpreting your financial data? Because I think we have about 65% of entrepreneur here. So just want to have a feel. Do you feel confident in interpreting your financial data? Okay, so okay, people are still voting. I can see 58% participated now. So all right, 60%, yes, they feel confident in interpreting their financial data, which is very important. 40% no. So the 40%, I believe that after this webinar, you'll be able to be a bit confident on what to look out for on your financial data. So thank you for that. After every poll, I don't know, my screen just freezes. Won't be able to share. Okay, so let's talk about the key financial data that you need to know from your business. So your management pack, I always say it has to have, especially if you're a busy person, if you're a business owners are always busy. So you can't afford to sit down with a long report. So your management pack should reflect and highlight key things. For example, you can see on my screen here under Know Your Business, you have your graph that shows your total income, your net profit margin, or your current ratio. So knowing all these ratios can actually help you to make informed decision. So you should, as a business owner, you should have key ratios that you need to track for your business growth. For example, in this case, I'm not going to talk through all the key ratios that we have put on these slides, but I'm just going to go through on a high level the key ratios that I think as a business person, you always need to know that. Obviously, total income, you need to know, is your income increasing from month or month to month or yearly or however, or quarterly, if you are producing your management accounts quarterly. But I always think that it's very important to every single month to set aside maybe 30 minutes to go through your key financial data so that you can interpret and see and make decision if the company is growing or if the company need adjustment. So obviously your total income, you need to know last month and this month. And how do you use that total income figure to make key decisions? Now you are saying we have put in marketing budget for this particular month, but we are seeing that there is no growth. So your marketing divisions you can actually involve them now to say, is there adjustment that we need? Because we can't see the effort that we are putting in is not really translating into increasing the income. So that number, if you put it in a graphic like this, you'll be able to see that there is something wrong here. So if you see here on my screen, 3.5 last year, 4.2 this year, there's a 22.5% increase in the total income for this example that I'm using. So that if it's like that, now you go back to say, what did we project? Which is very important. Like what I'm saying, when the year end as a business owner, you need to start projecting the growth that you're anticipating your company to have. If the growth, you didn't meet it, you need to go now and evaluate why did we not meet the target that we have set for ourselves. So one also important KPI, I call them your business KPIs, is the net profit margin. So the net profit, you take your net profits after tax and you divide it by your total income. But this one, you're not going to be doing it. It's coming from your management pack. I'll show you, because as long as you plug in your numbers, you should be able to produce good reports so that you interpret your financial data. So the net profit margin ratio represents the profit an entity retains after incurring all costs. So the higher the percentage, the more profit is generated per unit of sale. So obviously you would want higher net profit margin. It also indicates that your sales has gone up or your income is up, and your cost you are containing. We call it cost containment. You are containing your costs. So you always want to have a higher percentage. So when you know that as a business owner, the key things to look out for when you receive your management pack, you go to say, okay, what is my net profit margin? If you see it very low, like 2%, right? Which means you have a lot of costs. You are getting income, but all of it is being consumed by the cost that you are incurring to get that income. So you now need to go back. Do I need to go and adjust the cost? Where do I need to adjust, or what should I do in this regard, so that at least you have a bigger net profit margin? And if you are a CFO of a bigger entity as well, if your net profit margin percentage is very low, it actually means the shareholders are not going to get any dividends, right? Because there's nothing retained, or there's nothing for them to get after the operational cost of the business. So net profit margin, it's a key ratio that you need to look out for, so that at least you can make decisions. You can just go back, is this net profit margin not high because we're having more costs than more income that we need to have as a business. So it's very, very important to know that ratio, net profit margin. So I've pretty much, you see that our projects, in this case, there are 4, but I'll just highlight the key ones that I think. So I'm going to talk now about the current ratio as well, because the current ratio is very, very important. It measures your liquidity. How liquid are you? Do you have cash in your business to continue? So net profit margin, then the current one is the current ratio. Like what I said, it measures the liquidity. So you are looking at your total current assets over your total current liabilities. For example, in the example that I'm putting there, you see that your current assets is 642, your liabilities are 154, so which means 4.6, that ratio. So the current ratio, it represents your ability to pay short-term obligations. Those due short-term obligations are those obligations that are due within a year. So what is key, especially if you are looking for growth, lenders, investors, and other creditors often use this ratio to actually understand how an entity can maximize its current assets. So when you look at current assets, we are talking about your debtors, right? So your cash in bank, your short-term investments, those are your current assets. And your current liabilities, those are the creditors, the people that you owe, that you need to pay within a year. So when you are now analyzing that, we are saying, are you able to meet, are your current assets, is the money in the bank, the short-term investments, able to meet your current obligation? So it's very important to see that. Like in my example there, you see that it went down from last year. So it's very important to also say, how are you building your current reserves, your short-term reserves for things that needs to be paid in the short term as well, like your current liabilities, your payables, your people that you owe for your rentals. If you are in a specific business, like for example, if you're in insurance, this ratio, the regulators actually use this ratio to assess your liquidity. Why? Because if you are in a certain business, you are in a position of trust. So if you can't meet your short term, if your short-term obligations are higher than what you have in your bank account, can people trust you? So the regulators, especially in insurance, or if you're in a position of trust, is key. And for lenders, like what I say, is also very important, because you need to have reserves to cater for your operational, because your current liabilities are your operational obligation. So if you can't meet them, probability that if you are in a position of trust that you are receiving maybe premium for companies to tap into people's premium or, people's money, there's a higher probability of you doing that. That's why your current ratio should actually be bigger if you are in certain industry. So you need to understand your current ratio as a business owner or as a CFO and track it each and every month or quarterly, so that at least you know that you are still controlling and you are in track in paying your current, in building short-term reserves to cater for your current obligations. So cash as well, you see, you always want to have an eye on what do we have, So when we talk about current assets, remember I said they can be your debtors, people that are owing you. So it's very important to see out of that current assets, how much is our cash, our bank balance, money that you have in the bank account, because cash is king. Understanding your bank balance will help you manage cash flows, because you can have a big current assets, but it's made up of debtors. So it's actually also a bad indication. If you have a lot of debtors, it means that you are not receiving money. You are working, but you are not receiving money from your clients. So it's very important also to have a ratio that you measure, or to see how is my cash in my bank account. Because for you to make a decision of any investment or any potential growth, or you want to introduce a product, you will need cash for you to be able to do that. So it's very important to know that how much cash do you have, because cash is king. Also, the percentage growth in customer, right, is very important. When you are sitting in, let's say you decide to say, I'm going to look at this ratio quarterly. for example, growth in customers, because you can't afford not to look at how much clients have you got for this quarter, because you might be not even increasing, but and there are certain costs that you cannot avoid increasing salaries because it's inflation and whatever adjustments. Your suppliers, they will increase their costs, but you as a business person or as a business owner or a manager of that entity, are you tracking the growth of your customers? For example, if you had 10 clients last year, first quarter of next year, of the particular year that you are in, how many clients do you have? So you need to measure the growth in customers. And also, if you have different products, you need to measure the growth in product sales. If you have, for example, us, we have auditing service, we have this other, so accounting, you need to track the growth in the product sales so that you can see which product is doing well, so you can make key decisions. So it's very important to also measure the growth in customers and also the growth in your product sales. Or if you want to go deeper, growth in customer per customer. How often is your customer, this particular customer, acquiring things from you? So that's a very important ratio. Then operating expense ratio. So this one is looking at your total expenses, less your depreciation and your interest expense, because interest expense is coming from the financing of the business. That's why we want the operational expense only. So you subtract that the interest expense, then you divide it by your revenue. So what you are looking at in this case, you are saying the operating expense, it represents the efficiency of an entity's management by comparing operational expenses to the sales, right? So this ratio, it actually illustrates how efficient an entity's management in keeping costs low while generating sales. Because there are two things, key things in the profit and loss or in running a business. You need to increase your sales. Also, you need to contain your costs. So how efficient are you as management to keep costs low while at the same time generating sales? So you can't keep, it's not a blanket to say we don't want to increase our costs at the expense of not increasing the revenues. So you need to still increase your revenue, but contain the costs. As it's very important to measure the operating expense revenue. So more efficient entities have lower ratios. So maybe as an organization, you need to determine to say, how is our expenses, our ratio, our efficient, what percentage do we need to have? Like in this case, you see that in this entity is 28%. So you can put that as a target to say our costs should not, we should have our operating expense ratio should be at this 30%, meaning to say you need to contain your costs of generating revenue to such an extent that at least 30% you get a 30% expense ratio. So remember, I said it actually measures your expense versus your sales that you have got, your operating expense. That's why we are taking out the financing expense, like your interest. So this is very important to see, especially if you are managing people. If you want to see your managers, are they thinking about cost containment, or they are just coming for authorization into the finance? Can you authorize this? Can you authorize this without thinking further around how you need to manage the operating cost of an entity? Then the key as well, key ratio that I want to talk about is the debtors days, right? Debtors days can actually show you, indicates the average number of days that you are taking as an entity to collect money from people who owe you or from your clients. So this ratio, obviously, it demonstrates how efficient an entity manages the credit it extends to the customers and how quickly that short-term debt is collected. So the lower the ratio, the faster. So in this case, if you are taking 60 days to collect. So you see, last year, this company was taking 14.5 days. So which means a lot of money were not sitting with people, but it was sitting in the bank account as cash, right? But now, the reason why here it's red, 310% shoot up, which is not good, because they are now taking 59.4 days to collect. If you are taking 60 days to collect, so that means you need to have like a huge cash flow to cater for all other operational costs from from your short-term investment. It's not feasible. So as you are managing these data days, it needs to be very managed well. That's why you see that people that are really using maybe some government entities, they struggle in this because government, sometimes it takes time to pay. And a lot of entrepreneurs who build their business based on government tenders or government entities only, some of them can actually close shop because government, sometimes it takes time to pay. And you'll be having like 90 days, right? And you can't afford because you have people, you have employees, you have rentals, or other things to be paid. So as an entity, you need to make sure that you manage this and you set it to say at least 90% of our data, or at least 80% of our data should have 30 days or whatever the case might be that you can set up so that you can actually manage this, because this translates to the cash, and we said cash is king in an organization. Also, you can also look at your number of employees. I think sometimes number of employees also indicate where you're as a company, and you can even streamline to some employees to say, okay, if I have 10 employees and each and every person is working on a project that is worth this, how much what is the return on investment per the employee? So that at least you see, is what you are paying the employee aligning to what they are bringing within the organization? It's a key indicator as well that you need to look at. So these are the key financial data that you can look at in a business. I didn't go through all the KPIs. I call them know your business data. So I didn't go through all of them, but these are the key that I think you need to be able to watch out for. Your net profit margin, your current ratio, and your data days, your growth in customers. So those are the key things that you need to always monitor as a finance person or as an accountant of your business. So before I go through an example of a management account, I want us to just look at how often do you review your business financial data? Can we take a few minutes to just complete that poll when it appears on your screen? How often do you review your business financial data? It's either when there is a... Okay, Shane, you have put in a wrong one. How often do you review? Can you put the correct poll? Okay, so in the absence of that, but I just want you to think through this. How often do you review your business financial? When there is a significant change in the business or before making a decision, how often? Okay, so I see that most people, 50% say at the end of each financial period, 50% says before making a decision. So from being an accountant, from an accountant perspective, you need to review your financial data as often as possible. Because if there is a decision that you need to make, you need to know that are we at the position, or is it this aligning with our financial goal? So maybe you can reduce, if you are someone who is actually reviewing at the end of the financial period, you can take it down to maybe quarterly, so that at least you know exactly how your business is performing and you make key decision on how you want things to work. Before making a decision, it's good to just reflect, but you need to know your numbers. Your numbers need to be in your fingertips, so that at least you are not caught unaware in terms of that decision that you would have to make. So how do you do that? That's the part that we now I want to quickly go through that now, so that at least when you receive your management pack from your accountant, or from your accountant, let me just share the management pack example that we did. Let me know if you are seeing my screen. I'm sharing a PDF. Okay, is it showing?
Yes, it is showing.
Okay, so as a busy manager or accountant or a business owner, you need to make sure that you receive a report like this, a report that will summarize, have an executive summary. So if you don't have time, 10 minutes, go through the executive summary. It summarizes everything that we have spoken about. You have to know your key figures, expense versus income versus expense, the financial health of your company, your break-even, your top expense, your cash in versus your cash out, your KPIs. This you define yourself. What are my key performance indicators for my business? We spoke about you need your turnover to consistently be up. It's a KPI that you've set, and your team knows about that. So your profit and loss, your balance sheet, and your cash flow. Okay, so when you receive this report, you see that, let's say I am the business owner. The way I'm reviewing this with you, I already know, can you see where there's red? I know there's something that needs my attention. My revenue for month of November was 320 rands, an increase of 6.7. I'm happy. Is it aligning? Remember, as a business owner, you already have those, or as an entrepreneur, you already have a goal. Is it aligning with my thing or my goal? We always said we need at least 5%, so we are happy because you'd have already put that target. You already communicated that target with your accountant, if you have an outsourced accountant, so that at least these reports like this can be generated. So I'm happy there. And also saying current financial year to date, revenue at the end of November, I'm having 2.9 million so far. And I had already picked, okay, we are in November, my year end is December, we are in 2.8. Are we meeting? In your head, as you're analyzing as the management people for the business, or as the business owner, expenses, you see there was a decrease of 6.4. Remember, if you are doing cost containment, a decrease is okay, right? So which means here we increased, you're analyzing, we increased the revenue, but our costs reduced, which is fine. So you start to analyze those. The top expense for the month of November were my advertising, my salaries, my depreciation. So when you go to cash flow, you know that part of the expense is depreciation, which is not necessarily a cash item. So your interest, your rent, like that, then your net profit. So it's a summary. So if I can't go through this whole report, if I go to executive summary, I already know how the company performed. I already know how the company is doing in terms of revenue, in terms of cost, in terms of net profit, in terms of the net profit margin that we spoke about as well. So when there is a red, I'll go and say, what is this? Current financial year to date expense at the end of November is 900, and an increase of 100% from last year. Ooh, 100%. So is my revenue saying the same thing? Is it how is my revenue? It's also an increase of 100%, which is, You see, so you start to make decisions based on the numbers. So the numbers are the ones that are key in you making financial decisions for your company. So after executive summary, if you still have time, summarized expense, can you see that you can just go through, oh, our expense was 114, our profit was 3.9. Okay. After taxes, that my net margin is sitting at that. So can you see the way I am just going through this report? That's what you can do as a busy business owner, because I know business owners are very busy, but when they get this report, they need to know what to look for and where to. So like in this graph, you see my income versus my expense. So which means the black part is my expense, is my income. The blue is my expense. So if I just go, this one is looking from May 2023 to November. Overall, how are we doing in expense and income? Okay, the month of June, that's where our expenses rose, and that's where our expenses skyrocketed. And what was the issue? Oh, we increased salary. So you need to know that on top of your head, and your revenues as well. So graphically, then you look, if you have time, you read about the graphical insights. Then the financial health. This is very important, especially when we are going through year-end. Set targets. If you have targets here under November 2022 versus the target, if you have set targets, this report will be able to help you to say, well, how am I doing with the targets? And is total income important to me? If yes, I'm going to highlight it. So your accounting should tailor-make according to what you need in your organization. So if this total income is high, we'll flag this as high, so that when we are measuring this health status, we need to see how many KPIs did we meet, targets achieved, financial health score. So the data of your company should be able to tell you how much are you. So you see this one, it's green, means it's healthy, right? If you see red here, it means that there's something that you need to look out for. I think when we were doing this example, there's nothing that was put as red here. So this company is doing very well. So, but if you are not meeting your target, like here we want an increase. If there was a 320 here, it was going to tick red, not achieved. That target not achieved. So in your fingertips, as the leader of an organization, as an entrepreneur, these things should be very clear in your fingertips. On your fingertips, you need to know that, hey, we have 16 targets, and you can tailor-make to say, if you want to also measure your employee ratio or whatever the case might be, put that ratio in. And when you do that, you'll be able to see, are we meeting it or are we not? These are the business health scorecard and the KPIs that you need to measure your break even as well. Are you break evening? Is your cost and your sales your break even point? So that's that one. Your top expense, advertising versus last month. If you come here, you see last month and this month. So which means last month we had 5,000 on advertising, but 43 this month. So because this reflects the key decisions that you would have made as executive of a company. So you know already why is it that. So if you had seen rent, if it has increased or not increased because it's a fixed cost, you expect it not to change that much. So these are the graphical presentation, cash in, cash out. I don't know why this one didn't come out, but you need it will show you your cash in, your cash out in summary, which is your bank, your KPIs, your profitability. If you want to measure profitability, those are the KPIs that I was talking through in the presentation. I spoke about the net profit margin, your gross profit, your operating expense ratio, your solvency, your liquidity ratios, which is your current ratios. Can you see here it went down, which means November it was 4.16, but October it was 4.27, but it's going down. So your current ratios, so when it goes down, it indicates. So as a busy person, you just go where there's red or where there's a spark or where you want to focus on. So the management pack should not be a trial balance, but should be able to help you make key decisions. Then if you have time now, you interpret, you understand to say, okay, my gross profit margin, the gross profit margin ratio represents the amount of, it explains. So in this case, it's 37.0%, right? So if you have set the target, it tells you that you didn't meet the target as well. So this is just explaining all the key ratios or explanation of all key KPIs that you would have put for your company. And so this is the management report. Then you go to your profit and loss now. So mainly people just get this profit and loss. No explanation for you to be able to make quick decisions. So this is the profit and loss now. You'll be seeing it increase by the variance plus 7%. So we grew our sales by 7%. Our cost increased as well by 7%. And our accounting fees remained the same. So this is your profit and loss and your balance sheet as well. You see what happened. So within those, and your cash flow statement that indicates what's in the bank. So this is your management pack. So you see, I started analyzing this. Maybe I did that in 10 minutes. You can also do the same, understanding the financial data of your company. And if you know what to look out for, you'll be able to know your numbers. And it's very, very important to know your numbers as a business owner. So that is our understanding our financial data. So in conclusion, we are almost done. In conclusion, bookkeeping and financial data interpretation are indispensable skills for business growth. So whether you like it or not, you're not an accountant or not, but you cannot afford to run a successful business without knowing the data of your company. So by mastering this skill, you gain the power to make informed financial decisions that drives business growth. You'll be able to identify and mitigate the financial risks within your business. And you also be able to optimize resources, to allocate resources for maximum return. So if you see, like, for example, if you are analyzing per product, you see that this product is doing well, and this one has a lot of cost, but it's not doing, you can allocate resources to say, this month, can these people go and work here or do this? So you'll be able to make those decisions when you know the numbers. Secure investors' confidence and attract financial opportunities. I spoke about the liquidity ratios that the lenders want to know. Are you liquid? The position of your business for long-term financial success. You cannot plan to open another office somewhere if you don't know the data or or understand your financial data, or don't know how to interpret it. So as you are embarking on this financial literacy journey as a business owner, as an entrepreneur, remember that the key lies in understanding and applying the underlying principles that we spoke about to your business context. And you need to embrace bookkeeping as a valuable tool and transform financial data into your compass for navigating the path to financial success. So the onus rests on you to understand and interpret it for decision making. I have met a lot of clients that they don't care about their financial data, and you see that those businesses don't grow if you don't put in the time to understand your financial data. So I know we are out of time. We are left with 3 minutes, but anyone with a question, you are welcome also to put it on the chat. Then we can conclude. Or you are welcome to raise your hand. Then we can maybe open up. Okay. If no questions, thank you very much. You can connect with us. Okay.
I had a question. I can't see where to lift my hand. Can you please share that first, the where you're showing the example of those management accounts, that first page that shows a summary of all the things that you look at. Is it possible to just put that for 1 second?
Okay. All right. Let me stop this one. The summary, the executive summary. Okay. Okay.
Yes, that one. I think that first page that shows what goes into the executive summary. So the summary of the executive summary.
Okay. Okay.
Yeah.
You mean this one?
Yes, this one. Yes, yes, yes. That one.
Okay.
Ah, okay. Thanks. Thanks
Okay.
for that.
All right. Thank you. So it's your executive key figures, income and expense, financial health, your break-even, top expense, cash in versus cash out, your KPIs, and profit and loss and balance sheet. These are the ones that people normally get, profit and loss, balance sheet, and cash flow. But what about this? The KPI, yeah. Your analysis. So it's very important, that one. Okay. Can I stop and go back to that one? Is it okay?
Yes, thank you so much.
Okay. Any more questions? So in the absence of...
I'm Molan. I've got one question.
Yes.
Can you guys hear me?
Yes, yes, we can hear you.
Yeah, I just have one question, Molan. When we go back to the ratio discussion, right?
Yes.
I would just like to know if you can maybe just share some light in terms of when we look at the profitability ratios, right? Like net profit margin or return on assets.
Yeah.
In what ways do these ratios reflect, the efficiency or should I say the effectiveness of a company's management when it comes to generating profit with the available resources that one has?
So you are saying in what way would these ratios indicate the management's efficiency?
Yeah, just if I had to look at it from that perspective, right, where I'm trying to make sense in terms of how efficient and how effective is the management within my company. How would I apply these ratios in my decision-making, or at least in taking it, into consideration when making my decision-making in terms of understanding how effective my management team is in making sure that we're actually generating profits? How would I apply these ratios in that space, or I would say in that decision-making process?
Okay, so I think first of all, for you to be able to apply whatever ratio is coming up is for you to set, you need to, as a management team, you need to sit and say, okay, for this product, how much profit do we want? And what is our basis of wanting that profit? Do we know our industry very well? Do we know how this product is working? Then you set the target. So now for you to now see, my management team doing what we have set target from strategic sessions. I always say, even as a small company, if you're a small company or if you're growing, you need to have annual strategic sessions. So from there now we are saying, okay, this is how, for example, a product X, we need a profit of 60% because you know the costs for you to produce that product. You already know this, so you are knowing that 60% is attainable. So now, if we are not getting 60%, what is the issue now? So the management, so that's why these KPIs for the company, you need to also link it to individual performance, right? So if you are supposed to have this profit, what is the reason that is there for us not to have 60% in this case? Because we would have set and put the targets and know exactly what's going to happen. So for you now to see if people are doing what they need to do, it will be reflected in the figures. So I'm saying the first point is for you to sit down in your strategy, understand the products, understand the cost, understand the profitability that should come out from there, and build expectations by setting those targets and measure them from the numbers that are coming. So maybe sometimes it happens that you have over budgeted or over expected, then you adjust, because there'll be reasons for you. If you had said you want 20% profit, right, or net margin of 20%, why? What happened? then you see that we didn't really plan for these XX operational costs which came in. So it's all everything that you planned in happened, but the sales team didn't really do their work to increase the sales. So hence we were stagnant. So that's the type of how you are going to make decisions using those figures. So it goes back to also planning as an entity, as an organization.
Okay. No, thank you, Marlon. I just wanted to get that, because I think what happens, especially as small businesses, when you get into the period of growth and your business starts growing, it's very difficult because there's no real guidelines for a small business to actually put together some kind of framework to understand how to actually interpret their KPIs for themselves when it comes to dealing with, you know, the expansion within their business. For example, starting to have management structures within your business. And I just wanted to understand how I could use these my financial ratios to actually help me in putting together the structures that can help me make those decisions. But thank you very much. I appreciate that answers my question.
So which is very important to have accountants that will give you the data for you to make a decision. So the report that I was sharing with you, that's the similar report that we share with all our clients, for example. So within the 30 minutes of, like, for example, small companies, they don't have board of directors, but you need to start operating at that level if you want to grow. Have that quick meetings with your client, with your accountants. Okay, how was my business performing? Then they highlight the key things, you know. So how do I turn this around? So you need to start with, that's why I started with bookkeeping. You need to have your bookkeeping should produce data that you can interpret for your decision making. Yes, well, okay, thanks for that, Mr. Rayland. Okay, so thank you very much. I think we are done with the session. And thank you for attending. We'll continuously have some more. If you have any suggestion of any topic that we want to dive in, like how do you do budgets as a small business or as a company that is growing, quicker ways of doing your budget, your forecast. So you can just put it on our charts. Anything that you want to talk about, how do I set KPIs for my team, starts from your company down to each and every person within the company to make sure that they are driving towards what you have done. And how do I do strategy session? Who should I invite? So operate, I always say operate as a big, like a big organization. The way listed companies are operating, you need to put that for if you are setting your company for success. Thank you all for attending. Thank you. See you in the next session.